What's going on YouTube? Welcome back to another YouTube video. In this video, it's going to be very simple, showing you guys how I was able to make over $5,000 this morning, catching the exact high of day, utilizing the candlestick anatomy plus the ICT turtle soup. Right, this is the exact strategy that I trade on a consistent daily basis to catch the exact highs and the exact lows on a consistent point day in and day out. And what made today very special is I ended up catching the exact high. Even though I sold for over 50 points on the S&P 500, price ended up dropping for over 300 plus points, meaning that I caught the exact high of an overall uptrend. This just goes to show that when it comes to ICT and turtle soups, I'm probably one of the best at it just because of the years upon years, thousands of hours studying and mastering this exact concept. And if you guys are new to my channel and don't know who I am, well, my name's Arkham and I've been trained for a little over 2.5 years. If you guys don't know my brother is Spectrades. He's been trained for a little over 6 years now. In the last 2 years here, I could probably say that I'm one of the top ICT traders when it comes to not only explaining it, but also simplifying it from a perspective to where many of my students see results. And if you guys check out this YouTube channel, it's very raw, it's very boring, but it's very educational. Right, in this YouTube video, I don't flex any Lamborghinis or watches or houses or things like that. Right, I just give you guys straight value. The goal of this YouTube channel is to give you guys the education, lessons, and everything needed to becoming a full-time trader, just like me and my brother Spectrades, through just sheer education and value, nothing else. But it's more than my success as a trader. My students are a #1 priority. As you guys can see, we have multiple students here getting funded accounts, payouts, as well as becoming full-time traders. As well as every single day throughout the year of 2025, me and my brother Spectrades will be live trading in front of everyone, as well as giving daily trading education. So essentially, the goal by the end of 2025 is to help every single student get their first payout and make their first $10,000 trading. We're basically calling this the Spark movement. And if you guys want to be a part of the Spark movement, and you guys have been trained for a while and are serious and want to make that dedication to becoming a full-time trader throughout this entire year of 2025, so if that's something that you guys are interested in, that's the first link in the description. Now let's get into the video. As you can see here, this is the exact trade that we took this morning. This was a turtle soup setup. We had that opening range breakout, and then we had the 1030 reversal. Right, I'm gonna be talking about that a little bit more here, but when it comes to identifying my overall models, a lot of it involves time, and we'll talk about that later on. But this is just the exact strategy that we trade today. This was during the AM session. Our entry time frame was around the M1 M5, made us a little over $5,000 this morning, risking only $1,500. You can see here, these are the screenshots here. Obviously, my first trade has a wider stop loss to take into account any added volatility, and then as price goes in my favor, I adjust my stop loss as well as I scale in. And as you can see, we caught the exact low right here, reaching back below for over 50 points on the trading day. And in this video, I'm not only going to create a daily bias, but I'm going to show you guys exactly what I was looking at with the trading team, as well as documenting and give you guys the exact strategy that I trade on a consistent daily basis, as well as my full trade plan, so you guys can also go into the charts and backtest this yourself and hopefully see similar results. So coming into our markets here, we're looking at the daily time frame on the S&P 500, and daily buys can be complicated to a lot of new beginner traders. Over here on my channel, we simplify daily buys very effectively. When we're identifying a daily bias, we want to pay attention to 3 components. Where have we been? Where are we currently at? And where do we anticipate price to go next? So we can see that price has been in an overall downtrend. The reasoning for this overall downtrend within the markets is because of tariff news, as well as fundamentals within the markets affecting it. You can see price has seen a significant drop to the downside for a little over 1,000 points here on the S&P 500. Coming into a new day, we want to pay attention to what has the prior daily candlestick done. You can see here the prior daily candlestick here, which was yesterday on Monday, and today's Tuesday. Following the Sunday opening, we can see the market drop for a little over 300 points there, and then it saw an immediate reaction to the upside. On this immediate reaction to the upside, we can see that price has came lower. Right, it's very important to pay attention to the candlesticks on the day time frame because they give you a exact narrative. So basically, what does this candlestick even mean? This candlestick means that this is where Friday closed. Friday closed right here, but Sunday opened up right here. So we can see here that when the market opened, it created a gap lower, which is bearish. Right, when that gap lower happened, we saw a immediate reaction to the downside, right, establishing this low. After establishing this low here, we can see price push higher. It pushed higher back into the opening price, and then it came all the way back up here, right, creating this high point. Right, so hopefully you guys are understand this. We closed on Friday, right, and then this is where we opened up on Sunday. So we opened up with a gap lower. Price then from that gap lower came down to establish this low, and then we saw a rejection to the upside. Coming into the new day, just looking at the prior day's price action, this means that we're bullish, right? And you may be wondering, how did you come to the realization that we were bullish today, right? I came to that realization because, right, when price came lower and established this low, we saw this immediate rejection to the upside coming back higher. Now coming into the new day here on Tuesday, what I paid attention to was I paid attention to the prior day high as well as the prior daily low, right? This is very important, right? If you had to choose between price coming back up into these prior day highs or these prior day lows, right, most likely you would probably anticipate price to come back into the prior daily highs. And the reasoning for that is not only is it a lot easier in terms of points value, because when the next day opens up here to this high, it's only 190 points, compared to if it opened up and came lower, it would be a little over 260 points. So it's a lot easier for price to rally higher back into these prior day highs than if it were to see a complete reversal down into the prior day lows. As well as we do have this daily bearish for that gap, right? When price creates inefficiencies within the marketplace, price tends to come back into them. So not only do we have this prior day high, but we also have this daily bearish for that gap. So this is a clear inefficiency or a gap within the markets that once price establishes this low here, then we see this rejection to the upside, price will probably come back inside this fair value gap. Market is a series of expansions and then corrections, right? We saw this expansion to the downside consecutively for a couple days now. We can see price create this rejection here. This rejection ended up being bullish, right? Closing bullish, and we have this bearish fair value gap above us. So obviously, right, these are the three signatures. Where have we been? We've seen a expansion to the downside. Where are we currently at? Price gave this rejection from these lows and we closed bullishly. And where do we anticipate price to go next? We had this bearish for value gap above us. Keep things as simple as possible, right? Understand daily bias is not going to be overnight, but as long as you continue watching these videos, as well as watching the daily trade breakdowns and daily live trading within the Spark mentorship, daily bias is going to be very, very easy to understand. Me and my brother try to simplify daily bias the best that we can for you guys, but obviously it's going to take time to master. As long as you guys continue showing up to these videos, as well as watching the lessons inside of the Spark mentorship, you guys will be very, very proficient when it comes to predicting the markets just like us. After I created my overall daily bias and what I'm looking for on daily timeframes, now I'm going to go down to the 4-hour time frame. On the 4-hour time frames here, just trying to keep things pretty simple. You can see here that the new day has opened up right here at 6 p.m. And then we can obviously identify those previous day highs as well as that daily bearish for value gap like we talked about. We see this immediate reaction to the upside pushing back higher. And obviously, like we mentioned, we have these previous day highs right here, as well as we do have that bearish for value gap here on the daily time frame. So obviously, my overall emphasis is I'm anticipating price to come higher into these previous day highs, because 80% of the time, price usually comes back into either the previous day high or the previous day low within the training session. So if I can mark out these previous day highs here, and we can see that price is in a clear uptrend, which we can clearly see here, right? We had consecutive last up close candles. We saw this rejection to the downside. Price found a level of support to push higher. So we can see here that price is in a clear uptrend, and my overall emphasis or targeting would be these previous daily highs, as well as we can identify this last down close candle right here as a potential bullish order block. This would be a bullish order block, right? So essentially this is what we would call a rally base rally, right? We've seen this initial reaction to the upside. We've seen price create this last down close candle right here, and then we saw this bullish engulfing candlestick right here. So obviously once price comes back into this last down close candle, hopefully it should find a level of support to reach back above into those prior daily highs. Really, that's going to be it for the 4-hour time frames. Just keeping things pretty simple, identifying my overall structure within the markets, any inefficiencies I need to pay attention to, as well as just identifying my overall drawn liquidity. So now I'm going to go down to the 1-hour time frames to see if I can get even more data. On the 1-hour time frame here, I'm just paying attention to overall structure before the 9:30 opens up. Right, 9:30 is the stock market exchange open. So obviously on a market like the S&P 500, that's when we can expect the most volatility to kick in. Price is in a clear market maker buy model, right? We can see price came lower down into this order block level, found the rejection that I needed to see this push to the upside. To see when we have long wicks within the markets, just like I teach you guys inside these YouTube videos, we can split them up into quadrants. We can see price comes close to that 25% of this wick level to find a level of support, right? And then we saw this push to the upside. You can see price respecting this bullish order block right here to see a push to the upside, right? Seeing this break higher. Like we mentioned, that 4-hour order block right here, price came down into it once again during the London session. See this overall push to the upside. So we can clearly see here that within this depiction, price is in an overall market maker buy model. And where do we anticipate price to go next? Right, obviously we have these previous daily highs. As long as price is in this uptrend and continue to go higher, these previous day highs would be our final area of take profit. So essentially these previous day highs would be an area to where we would anticipate the marketplace to go up into. After price takes out these previous day highs, this would be the overall end of the market maker buy model. Trying to keep things pretty simple, right? On the 1-hour time frames, the 4-hour time frames, we're basically just understanding, are we in a market maker buy or are we in a market maker sell? Is price creating higher highs and higher lows to continue an up move, or is price creating lower lows and lower highs? Creating higher highs and higher lows, price is finding respect at these last stock close candles, as well as bullish for VAG gaps, which if we were in a bearish market, price would not respect these bullish order blocks or fair VAG gaps. So the fact that it is respecting it means that price is bullish, and we already have our drawn liquidity. We have that daily fair VAG gap, and we have these previous day highs, right? This would be our drawn liquidity to end the market maker buy model. After price takes out these previous day highs, most likely price would probably see a consolidation or maybe see a reversal lower. So all the way at these lows, this is where the market maker buy model starts, and at these highs, this is where the market maker buy model ends. So if the market opens up and sees an immediate reaction to the upside and I'm not able to get a piece of that buy, then obviously this is where that market maker buy model would end, and I would potentially look for what's called a turtle soup. And this is the exact strategy that I trade. How I trade is based upon a counter trend. So if the market is in a expansionary phase, my overall emphasis is I want to be catching the highs here before that correction happens. So obviously price creates higher highs, higher lows, higher highs, higher lows. I'm not able to catch a piece of that pie when price is going higher. I have more than enough room to catch a correction move coming back for either a correction or a potential reversal. Exact bias that I had this morning. Basically, I was talking to my live trading team and I said that price was going to come back up into these prior day highs. If I do not get a setup to come back into these prior day highs as the marketplace opens up, then most likely I would look for some type of turtle soup entry at these prior day highs to come back lower. This is what you call an if-then scenario. If this happens, I would do this. But if this doesn't happen, then I would do that, right? If price gave me a scenario to where I could catch buys, I would catch the buys into the highs. But if it gave me a scenario where it opened up, went higher, and I'm not able to catch the buys, then obviously I can always catch a turtle soup. You always want to be flexible as a trader and have multiple different plans or scenarios in case one doesn't pan out. Now I'm going to go down to the 15 minutes time frame and show you guys exactly what I was looking at. Coming down to the 15 minutes time frame here, it is important for you guys to understand when I do trade. So I trade between 10 to 11 o'clock or 11 to 12 o'clock. So usually I skip out on that 9:30 to 10 o'clock range, but my overall emphasis was I was anticipating, right, we have this 15-minute fair value gap. I'd want to see if price would maybe come down into this level to take out those previous day highs. And once price took out these previous day highs here, I want to see if we could get what's called an exhaustion, where price would come into these levels and then we would see a overall consolidation at these highs, and then we would see this break, right? From this break point, this would mean that price no longer can support at these high points. And once price gives that retest of this neckline right here, right, gives that retest of that neckline, then I would overall frame my short, reaching back below lower prices. So this was my overall emphasis this morning. If I'm not able to catch the, trade reaching back above these highs by 10 a.m. and let's say 9:30 just opened up and rallied higher, then I can always catch that turtle soup. I'm gonna let this pan out here and see what 9:30 does when it opens up. 9:30 opens up, comes down into that fair value gap like we talked about, perfect. And then we saw this push to the upside, right? Price starting to create, rejection after rejection here. So basically at this point, I went down to the 5 minutes time frame, as well as I went down to the 1 minute time frame. These lower time frames here, I'm just looking at the overall structure, right? I want to see price struggling to break higher, right? I want to see price struggling to break higher, and then we see a break of that neckline, right? We can see here price saw this initial reaction to the upside, right? And then we saw this push higher, didn't necessarily break back below the low, right? Okay. And and then we can see price come back higher once again, kind of failing to take out that previous high right here. So essentially overall showing that, you know, price is struggling to break back above these high points. Basically, I'm just waiting to see if price is going to break back below this low right here. On the 1 minute time frame here, I'm just being patient. Price breaks back below this prior low point right here. I want to see price come back within this neckline range, right? Within this neckline range. And I want to see price struggling to go higher. And then off of that break, we can then frame our short. We can see price create that rejection here. Comes back within this neckline right here, right? Comes back within this level, right? Within this last time close level right here. So I'm going to mark out this last time close candle right here, basically as our neckline. And I want to see, right? I want to see price create rejections, right? I want to see price create these rejections, right? Basically signaling that once price comes back within this area, it cannot break back above it. Just paying attention to overall price action, right? Because we're at a significant level within the markets to where we can anticipate a potential correction move. So obviously, once we're at this resistance level, we want to see price giving the resistance that it needs, right? Resistance is like a ceiling, right? Once price comes into a ceiling, it smacks its head, it smacks its head, it smacks its head, and then it eventually comes lower. This is exactly what I'm looking for, right? I want to see price continuously smack its head at this level, giving that exhaustion that it needs. See price come back again, gives in this rejection once again. Price create this bullish engulfing candlestick right here. And then we can see price create this bearish engulfing candlestick right here, right? Off of this bearish engulfing candlestick, this is exactly where I frame my short entry. And the big reason why I frame my short entry right off of this bearish engulfing candlestick was basically just because of the fact that when price entered these previous day highs and back into this level, this is now over 30 minutes worth of consolidation, right? Price has been consolidating within this range for over 30 minutes, right? When price is in a specific level and it's consolidating like this, this is what we call accumulation, right? This is when large buyers like smart money, institutions, this is where they're actively selling positions. And this is where price can create a consolidation. So, right, when you see a consolidation at a specific point of interest, right, rather a liquidity pool or maybe a resistance level, you see a consolidation like this, this is what's called an accumulation. We're spending a significant amount of time within this level, accumulating, and then we can see this break back lower, right? Off of this break back lower, right, we want to see price come back within this neckline, right? Within this neckline here, we can see that initial rejection right here. We saw this push higher right here, right? We're just looking for this bearish engulfing candlestick right here, identifying overall market structure on the lower time frames, just giving us the indication that price is potentially bearish. Our short idea right here, and my overall take profit area was reaching back below these lower levels here for a little over 50 points. As well as we can mark out these 930 lows, right? This was the area my brother was targeting, right? On the NASDAQ, he was targeting those 930 lows, but I was just targeting back below these lows right here for a little over, 50 points on the trade day. You can see giving us almost a 3 to 1 R there. Consolidates a little bit, that's totally fine, right? We're seeing that rejection. Comes back higher, that's totally fine, right? This is good signature. This is just showing that price is just consolidating within this range, but overall, it's not giving any bullish engulfing candlesticks that's indicating that price is going to break higher, right? It's giving multiple rejections, right? And then we saw that break lower, and obviously from that break lower here, right, and price starts to leave us, this is where we can potentially scale into our position. So basically off the break of this neckline here, can mark out this level right here, create this bearish engulfing candlestick right here, right? I can then scale into my position. Once price leaves this overall level, price should not come back into it. My overall emphasis is when I catch the turtle soup, I catch it within that accumulation. And once price leaves that accumulation, it's not going to come back up here. Be confident as price breaks back lower, I can scale into my position. You want to take that first trade with a little bit less risk. And then as price goes into your favor, you can obviously scale in. Instead of making that 3 to 1 R on this trade, you can make a little over 4 to 1 R, because as you scale in, once price goes into your favor, you make more profit on that trade. And this is how I utilize risk management, so essentially to keep my losers small and maximize on my overall winners. And as we can see here, price soon just enters a complete free fall, reaching back below these overall lower levels, just like so, tagging us in, continuing even lower, right? Those 930 lows right there. Price eventually takes out those 930 lows, which, in this case scenario, I definitely could have, taken some profits off at these lower levels. I definitely could have left a runner potentially for, potentially back into those 930 lows, or a runner down here into these lower levels for sure. But overall, this ended up being the exact high of day, which price ended up dropping for a little over 300 points throughout the entire trading day. So as we can see here, price ended up going into a complete market maker sell model, and this is exactly how the market closed out today. You know, looking at this from a higher time frame perspective, even though I caught, you know, that 50 points, looking at it here, man, I could have definitely gotten some generational wealth, but you know, it just is what it is sometimes, man. We made good profits today. Here inside the Discord community, Tim here, he said he joined yesterday, and today off that trade alone, he made a little over 6% or $700 on his Forex account, which is pretty crazy. You know, she's been very consistent, a Spark University student. We have, you know, some other students, you know, Damaris here locking in $1,500 on the day, really solid, as well as my brother catching right the exact same trade. He made a little over $4,000 today, and me, I made a little over $5,000. And you can see this was a Zoom chat right here. A lot of students got paid today. Today was a very solid day. And if you guys want to be a part of the Spark Trade mentorship and trade live with us every single day, as well as join the Spark movement, which we're helping every single student within the Spark mentorship get their first payout and make their first $10,000 trading. If you guys want to join that movement and make the investment in your trading future, you guys can click that first in the description and join the Spark Trade mentorship. So that's going to be it for today. I hope you guys got a lot of value from this video. Make sure you guys click that like button, subscribe if you're new to my channel, and comment what you guys want to see next. Hopefully I'll see you guys in Spark. Be safe.